Boom, boom, boom. What's going on with the FASB, AICPA and PCAOB? This is IssuesWatch podcast. Hello and welcome to IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing in Sobel & Company, and this is our IssuesWatch podcast for the New Jersey Society of CPAs. My disclaimer is the views and statements expressed herein are my own and not necessarily those of Sobel & Company or the NJCPA. So don't call up Ralph or Alan and complain about me. Okay. Our goal in these sessions is to provide you with some brief information on some accounting and auditing updates, and you can look up a bunch of the information. I'll try and give you some of the references. So for instance, as a starter, a lot of recent discussion on accounting for the employee retention credit. Now that people are getting the refunds, they've applied, they're getting the refunds, how should they be accounting for it? The consensus generally is you should be accounting for the employee retention credit similar to the PPP, the Payroll Protection Plan loans. So if you don't recall what that was, just very, very briefly, the nonprofits had their own accounting for it. So we'll put that aside, nothing against nonprofits, but they had their own, follows under the grant type of accounting. But as it relates to generally for the commercial type of companies, there was two methods. The first one was the FASB took a stance under their form over substance approach. And they said they recommend that you account for it as a loan until it is forgiven. Now, I'm extremely summarizing here, okay? So for those that are getting picky, but I'm extremely summarizing. You can read anywhere on this. It goes a little bit deeper. So first, that was the FASB's position, but says, but we really don't have government assistance type of accounting, except for in nonprofit area. We don't have this government assistance accounting and guidance. So what do? You can look at the international guidance because they actually have it under IAS 20, which allows you to recognize it into income when you've substantially met all the requirements. I won't go into that much more, but if you do have any questions, feel free to reach out to me. So there are different ways to address the PPP loan and according to the ERC. Revenue and lease accounting is a recent Journal of Accountancy article, very interesting article where they said that people are still having problems adopting the revenue recognition and the leases. And the leases aren't even effective yet, but the revenue recognition is a big one. That's already in there, particularly in the construction area and when you have multi-performance obligations. As it relates to leases, where they feel that people are having the problems in embedded leases, identifying the embedded leases. Now, I talked about leases a while on the first episode. You can go back and look at that IssuesWatch. And Frank and I have talked about leases many, many times at the chapters and other organizations. And embedded leases is something that we've said people are going to be missing. And sure enough, it's in the Journal of Accountancy article. They've also said, and I've said this for years, is people are not taking a full inventory of all their leases. Okay. I'm not saying that you that you have a lease on inventory. No, I'm saying take inventory of all your leases, all your agreements. You have to go through do it now. The pronouncement's not effective for most non-public businesses. So start doing this now. Create some standard procedures, and the disclosures are a big issue as it relates to the leases. It was a great Journal of Accountancy article. I strongly recommend you look it up. Okay, that's FASB related. AICPA related is reporting and attestation around ESG. What is ESG? Environmental, social, and governance issues. This is going to be big. This is something that's coming out. Sustainability was popular a little while ago, and it kind of fell off. But with all the issues that are going on, it mainly relates to public companies. How are they going to be reporting on environmental, social, and governance issues as it relates to their organization? The AICPA put out a roadmap by the Center for Audit Quality, not an official guide, but they put out a roadmap. And the recent article that I read gives you 5 steps as it relates to ESG. Now, there's a lot of people that aren't in a public entity right here, and they're saying, well, what does it matter? Well, I think that this stuff tends to trickle down. Now, it may not reach some of the smaller commercial that follow PCC, private company council, but there's a good chance some of this might get to some of the larger private companies and particularly nonprofit. So reporting on environmental, social, and governance issues. Check out that roadmap that the AICPA put out. It's very interesting. It gets deep. And the 5 steps that was recommended in an article I read is establish a program, assess what you have, design and implement, sustainability or sustain, and assure. So it's really a hot area that they're getting into. And I strongly recommend that you look into that. Not a lot of other AICPA stuff. We're getting towards the end of the summer now. I don't know. I know that on things like this, you should never issue the date because people look at it at different times. But I anticipate, or after these coming weeks, that it's going to get a little bit hot and heavier with new pronouncements and new guidance coming out. So, and some of us in practice, myself, Frank Boudelet included, we deal in a particular industry of broker dealers. Now, every year, the PCAOB, in the past, they used to have actually some free training that they would give out for orders of broker dealers and orders of small public entities. So it was actually very good. Of course, not non-public. It was very good. It was great for those that want CP, that it was free, but it was extremely informative. You heard some insight as to PCAOB, FINRA, especially for broker dealers. With COVID, they kind of stopped doing it. It was unfortunate because we really enjoyed getting the information. But the one thing that they do every year is they put out an annual report. They call an annual report on interim program related to audits of broker dealers. Now, I know that there's a lot of people that are here that are listening to this and they say, well, it doesn't matter. I don't audit broker dealers. The important thing is you should look over this report because it kind of gives you some insight as to this is what the PCAOB focuses on. It's like I'm a peer reviewer amongst a lot of other people within the society, and we focus on the peer review comments, the peer review findings that the AICPA looks at. Because when the AICPA is focusing on consistent findings, they then make that their approach for how they're going to come out with pronouncements and how they're going to come out with comments of different things. Similarly, the PCAOB, when they go through and they do their own interim inspections, and those that are in the public realm that you know that they do actual examinations, they look for consistencies and issues. Now, you can put aside your comments and your own editorial commentary of the PCAOB and what they're looking at, what they're focusing on. That's really unimportant. The important thing that I'm trying to say is this is what they kind of look at and what they focus on, especially into next year and going forward, and they want to see improvements. Now, I'm just going to give you just a summary of that information because really, if you look at their report, it's a great report. It's public information. It goes a lot deeper. Of course, deficiencies in firms' audit of broker deals of financial statements and supporting schedules and examination and review attest engagements. Other instances of non-compliance with PCAOB standards. I know I'm really summarizing here. Look at the actual report itself because it goes real deep. Deficiencies related to the firm's quality control system. The firm's quality control system. That's a big one. If you remember last episode when I said that the AICPA is coming out with the quality control, or not quality control, quality management standards, kind of marrying everything up here. And last one, the big one, which is a real hurtful. It's really hurtful. Oh, I hit the mic. Really hurtful to our profession is independence findings. I talk about non-attest a lot. The PCAOB really focuses on this. I'm hoping that these independence findings are not that somebody's typing the financials, which we're not allowed to, but do yourself a favor, find that report, look it up, and just get some insight as to what we're going to do. Those are topics I wanted to bring up today. I want to thank you for watching. In closing, I encourage all NJCPA members involved in accounting and auditing to join. I got to get this right, Rachel. The Accounting and Auditing Standards Interest Group, not the Resource Group. Okay, that's the old name I've been told. So Accounting Auditing Standards Interest Group. Go to njcpa.org/groups to sign up and be sure to register for upcoming IssuesWatch Live broadcast. There's a professional issues update on September 13th with a replay on September 14th. And there's a virtual Q&A with Jack Chitterelli, the Republican candidate for the New Jersey governor, on September 20th. NJCPA members can register to attend these events for free at njcpa.org/issueswatch. Thank you for joining us. We will be back with new episode in 2 weeks. You can access all Issues Watch podcast episodes at njcpa.org/issueswatch, period. I wouldn't put a dot at the end of too many things. I've been saying it, but I did say the slashes.